Good morning, good afternoon, good evening, all over the world. Dobson 777A here. Well, I thought I'd do like a quick year end report to see what we were kind of like looking at the projections, how accurate we were. And one of the interesting thing was I had to dig back into some of my reports and try to find the last time I did one of these pitchforks. And it looks like, or I should say the earliest this year, without digging too deep, I found one back in March. And we were looking at this was just before the dump that happened, and I was making a little projection of how this thing would come down. It turned out it was much more of a deep peak that came down in this range and then came back up. But in any event, I was looking for this point out here to see where we were going to be at the end of the year, and it looks like we were saying it was going to be about 1840 for the center line. So that was my rough projection using this pitchfork chart. So I always thought this is a really neat thing to kind of look at it. So what happened? Where did we end up for the year? Now, it's the market is still kind of going all the way till midnight, so we might see some changes. But let's see what it looks like. So I've been watching this off and on all day, and we've come up and we touched 1900. And then it rejected back down, and so it's been sitting about 1898 off and on, bouncing between here and 1900. It came all the way down to 1891 for a short period of time and back up. So we don't know exactly what's going to happen for gold, but this is where we're at right now. And remember I said about 1840, well, this is 1898, and here is silver, 2638. We came all the way up and touched 2657. But the 1900 looks like thou shalt not pass right now until something breaks through, but that's the upper limit. They don't want it to go over right now. So let's look at the current pitchfork chart. So the current pitchfork chart is showing 1897, and you can see we're just below the center line. This is what's amazing about this, folks. You look at this thing. This is right at the end of the year, just slightly above the line. I may have this thing off a little bit here, and then on the line, just below the line, and then up here, this is saying by the end of this next year, I might have that a little bit too far along, it looks like. It's saying like around 2387, we'll say 2400. That's roughly what it looks like. So that's potentially where we're going to be next year. Now I did some calculations here. Gold is up 59.5% since this low back here in September 2018. And for 2019 we're up 18.9%, and then for 2010 we were up 24.7%. Now this is, if I remember correctly, it was like a 32% change between here and here. So it's possible that we could see a little bit more here. The slope could change as we see this 50-week moving average is coming off the bottom line. That would indicate that we've got an increasing rate of change, which means it could be substantially more than this. So we'll see. But anyways, this is our glide path is the way I look at it. This has to be managed the way this thing is running up here. This just would not happen normally. I find this very curious that this thing is on this path. So I hope you can understand. I haven't seen anybody else doing it this way, but it sure seems like this is working very well. So we're looking at potentially like a 30% return this next year, going from 24.7%, so it'd be maybe 32%, I think, if you did the change from here to here, and it's the same. So that's kind of where we're looking. So we're going to be in the, let's say 2,500 range is where we're looking at. Now I have to admit, I kind of went through the whole show and I was reviewing and editing and everything, and I decided I better come back and insert a comment here. I want to make sure that you understand, even though I've harped on this over and over again, I want to do it again. This chart shows you why you should not be holding any substantial amount of cash. Anybody that's doing that has to be an idiot. Anybody thinks that anybody else is holding cash substantially to be safe is an idiot. Now I'm going to tell you, you need some amount of cash. In case like the bank shut down for a week or so, you need to have stuff to be able to buy food and whatever. But I mean, that doesn't mean you should have hundreds of thousands of dollars in cash. I mean, unless you're a billionaire or something, I don't know. It just doesn't make sense. This chart shows you since 2018, your purchasing power may have gone to half already. I mean, that's kind of what it's telling you. Now, some of it is probably not quite that bad, but maybe you've lost 20% purchasing power. Gold will get you ahead. But this chart shows you it's kind of like a balancing beam. You know, if the dollar's going down, gold goes up. If interest rates kind of have the similar effect on gold as well. If interest rates go down, gold goes up. So it's a little more complex than what I'm showing here, but I just want you to realize if I'd had this amount of money sitting in cash, you should be kicking yourself if you've done it, because I've been dead on the money on this, and this is not changing anytime soon. It doesn't look like it yet. So I think, you know, we're doing the right thing. Just keep on this path, because all of these things are moving out, and gold is going to be the barometer probably of everything else, and we just got to go along and play the game. Now, I played around with the various precious metals. So we have gold, which is this green and red bar chart. Then we have silver, which is the silver colored. And then I put the large silver miners in, that's the purple. And then we have GDX is the goldish colored line. And then we have platinum here. Now this is year to date. And so you can see platinum was up 9.1%. Gold was 22.3%. Large miners 23.5%. And then silver miners, large silver miners was 40%. And silver itself was 46%. Now what's curious about this, it doesn't show any leverage at this point for the miners for this year. It does when we go out longer periods of time, like in the 5-year range, we see the miners kick up. But what I wanted to point out is going from this year view, if we back up to 6 months view, all of a sudden you see silver and platinum take the lead. This is platinum right here, blue. And if we go to 3 months, platinum takes the lead. So platinum is breaking out, folks, and it's breaking out faster than silver. Today, the stock market performance was, I guess in the Americas, we could say, let's say up 0.5% average here. Canada was down 0.7, Mexico 1.35, Eurozone and France down 0.8, United Kingdom down 1.45, China was up 1.77. The sectors were all green except for energy. So here's the performance of the ETF physicals. And GLD is gold, and that was up 0.37 today, 24.79 for the year. Platinum was even today, but up 10.78. Silver was down 0.77, but up 47.21 for the year. Our ETF miners, looks like it was down 1.32 for the day, but up 27.27 for extremely simple portfolio of 5 different ETFs. The improved portfolio was down 1.56 for the day, but 35% for the year, which is nearly 8% above the other portfolio. I'm seriously thinking about not including the ETF positions this coming year, because they actually drag down our performance. So, or I'm going to knock down how much we're holding into those to a lower percent. But more than likely, we may just go to stock positions only, since we already have this as an ETF position. My portfolio was up 53%. This isn't necessarily year to date. This was from, I think it was August the previous year when I had started this. But I was down 1.3 today. And John's portfolio was up 36% for the year and down 1.32. I hope everybody's treating you well. I hope you're doing well. Do the best you can. God bless.
Go potty.